Hello, good morning, and welcome everyone. It is Tuesday, September 17th, and this is the War Room. I am AgYield Marketing Manager and everyone's favorite backup host, Jack Coakley, filling in for Dan today. As always, feel free to join the discussion here. We'd love to hear from you. You can always post a comment wherever you're watching or shoot us an email at info@agyield.com. Let's jump straight into the numbers with Brian.
Hey, thanks, Jack. Good morning, everybody. Overnight, D's corn just up a half, 4.11 1/4. No beans up 3 3/4 at 10.08 1/4, and D Chicago wheat 5.81 1/4, up 2 3/4. Crop conditions also came out after the close yesterday. Corn is at 65% good to excellent. They were looking for a 1 percentage point lower. It actually came in 1% higher. Way above the 5-year average of 56%, and last year was at 51. So not too much of a mover or shaker on the corn side of things. Beans actually dropped 1%. They were looking at to be unchanged at 64%, but way ahead of last year's pace at 52 and a 5-year average of 56. On the harvest numbers, corn is up to 9% harvested. They were looking last year was at 8%, so kind of just in line there. And beans were at 6%. So just kind of in line with the 5-year average. So
those are certainly numbers, Brian. Thank you for
yes,
that.
you got it.
Well, enough rambling from the useless host. Let's kick it over to Dustin to talk a little bit more about what's rattling around in his brain and what's going on in the markets.
Yeah, thanks, Jack. CONAB was out with some fairly large projections for the 2024-25 soybean crop. Talking about a 12.8% increase year over year on soybean production. So just another reminder, that we still have these major competitors down south. If they have a good growing season, the world will probably still be, flush with supply come next summer. They are starting off very dry, and the funds are, still quite short on soybeans. So it's kind of hit or miss. We start seeing some favorable rain or some favorable weather down there in the next couple of weeks, then that's probably one of our bigger risks right now. Anecdotally, we've heard some very large bean yields in Illinois so far. It's still very early in that harvest. Anecdotally, hearing some really large corn yields as well from that region. So I still don't think we've hit any of that gut slot selling yet, like we saw for the September contract. When we were making the lows there late August, that I think a lot of that was old crop corn that needed to come to market. Now we have a lot of those facilities and locations full of grain going into harvest. We've got river levels still projected to be low, and then we've got record yield potential in Iowa, Illinois along the river. So I don't know. It could be the calm before the storm, or maybe there's something else shaking up in this recent support that that we haven't seen yet that justifies it more. But I would be a little cautious of if you need to sell harvest bushels, we're seeing corn and beans creep up above 4, creep up above 10. Consider what your needs are, and where think about where these bushels are going to go. If you have an excess, if you're starting to see those larger yield potential, where are those bushels going to go, and how are you going to price them?
Well, that's great stuff. Ben, anything to add?
Yeah, I would just say that the market's been kind of in a consolidation mode here after a rally off of our lows. Technically things look pretty good, particularly corn being above its 20 and its 50-day moving average. That being said, we're looking at a harvest of one of the largest crops we've ever produced. Low river levels. The logistics here are going to be a challenge, I think, over the next month. You never say never with commodities. Technically, it looks good, but fundamentally, I think that we have some headwinds over the next 4 to 5 weeks. And to me, that makes me somewhat concerned. I'm going to go back to the lows that we saw off of the old crop selling in August and September that really pushed markets down. We had mentioned numerous times, is this potentially kind of an artificial low trying to push too much stuff to the system at one time. We won't, right now it feels that way, but we certainly have an awful lot of bushels that have to move, in the next 5 or 6 weeks. So I'm being somewhat skeptical, playing devil's advocate, that those fundamentals are going to have to play out. But commodity markets, sometimes you pull the right levers and the right switches, and the short gets nervous. I do think that they're going to run into significant amount of selling if we start to rally, and it might just be a kind of a slow grind. I'd like to see us trade some significant volume above 410 to get a little bit more excited, and we've not done that yet.
Thanks for that, Ben. Anything else to add here, guys, in the grain side? Dustin?
Yeah, so we've got rate cuts expected tomorrow. So I think we just went to a more favorable odds that we'll see a 50 basis point rate cut tomorrow on the FOMC release. So market is responding. There's been a lot of downward pressure on the U.S. dollar index, so the dollar's been able to hold that 100 mark so far. I think the low in the D's contract was 100.08 and a half there late August. But if for some reason we see that 100 threshold pushed through there following this rate cut this week, that might be another undertone of just general support. So again, that might be that thing that we're not really understanding really about this recent rally. Maybe it's currency related. You look at things like gold. Gold is hitting new all-time highs this week. It's just been on fire. So the value of dollar denominated assets can move outside of fundamentals. And if we're seeing some sort of a resurgence there in the commodity sector, even with corn, looking at record yields, it might still find a bid. And that's partly why I think looking at the spread markets, especially, what you have to deliver at harvest versus what you could carry up to July versus, how you're hedging D25. Those are all kind of different topics for hedging, how we go about that. I think there is a near-term storage problem with being as full as we are coming into harvest. But that's why it's the post-harvest logistics will be, I think, very valuable this year. There's probably no question on that. And, I just would be cautious not to have too strong of an opinion either way. We've got some really weird things happening in the outside markets, due to the fact we're coming out of, relatively high rates for recent times at least. And, we're going to get some guidance this week on forward policy. So how that market takes that could actually have an impact on how we price grain. So,
yeah, good stuff all around. Any other grain-related parting shots before we take it over to Ryan?
Yeah, I was just going to bring up just the wheat complex. Kind of a little surprised with the sell-off yesterday. We got worldwide production risks out there. We have had quite a move to the upside here, so it might have been just some profit taking coming out of there. But looking at the Black Sea region, obviously it's a hotbed, but they're really dry going into their planting season for wheat. So, you take that production out of the mix, plus you take China out. We're tight on stocks, probably 07, 08 timeframe. So, something to keep an eye on. Maybe you got to switch to feeding the world some corn, and maybe that can be something that can finally give some support here. So something I'll be watching for you guys.
Yeah, that's a good point. That could be another, just underlying support in this recent rebound is just global grain supplies being quite tight. So good point, Brian.
Brian, always with good points. Let me tell you. Ryland, I'll kick off your segment by saying the Coakley House is all chicken legs and pork tenderloins this week. So retail meat, very expensive.
Yeah, no, I get it. My fridge is pretty much looking the same way right now. And hopefully that changes at some point. We are seeing box beef prices still kind of trickle lower here. I think everybody's really hoping to see that bottom last week, but it just really doesn't feel like that's happening yet. Futures are kind of slow to start this week, pretty choppy, kind of two-sided action yesterday. We started off good, but kind of gave back the gains. So I just think the market's just kind of waiting right now, looking to see what happens with cash, looking to see what happens with cattle on feed report on Friday. So just a lot of that right now. Open interest was down 976 contracts, so it does look like we're probably going to see a little bit more liquidation at some point this week. Unless we get some kind of surprise in cash, Packers start paying up, that kind of stuff. I don't think the market really thinks that cash is going to start taking off from here, but you never know. We'll see how aggressive they want to be this week, especially with the report kind of looming. On the hog side of things, you had a little bit better of a close. You had some good gains. Looks like you tried to hold some near-term moving averages, even though that we know that cutout and cash is usually going to trend lower pretty much between now and the end of the year. It looks like we're still finding some demand here and there to kind of keep things up. So cash looked like it was up almost $1 yesterday, and we had carcass up about 32 cents. So a little bit better sentiment right now. But once again, it just feels like we're waiting for something to show up on the demand side of things, or maybe a little bit of a tighter cash market, and it just doesn't seem to be happening. So it's kind of what we're watching. Maybe we get a little bit of surprise on the exports on Thursday here for the hog market, but I think that's really what we want to see, is maybe some better demand sentiment.
Definitely. Well, if that's going to do it for us, I just want to thank everyone for tuning in every morning. It means the world to us. If you love the show as much as we love putting it together, give us a like and subscribe on YouTube. It helps us out with the algorithm. It gets the show out to the right people, and it keeps you up to date on all things AgYield. So we'd sincerely appreciate if you like, comment, and subscribe. And don't worry, if you don't see this message, you'll see my face again very shortly when I start the ending video, where I ask you to do the same thing. So, maybe you'll get it on the second time. We're streaming live on X, Facebook Live, and YouTube Live every day at 8:15 Central Time. Thanks again, guys, for one, having me, and two, having a great discussion here today. We'll be back tomorrow with more fun stuff. So thanks again, everybody. Have a good day.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.